morning. Thanks for tuning in. You're watching the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil. Let's take a look at the headlines. Markets stage a rebound after Monday's steep correction. The Nifty is back above 12,100. The volatility index also cools off, while all sectoral indices trade with gains. Stocks like Biocon and RBL are seeing a rise in open interest. We have HDFC Bank, which is the top point contributor and contributing as much as 28 points to the Nifty upside. And ITI is trading with gains of close to 12% after the third quarter earnings.
All right, those are your top headlines at this hour, and looks like the geopolitical tremors provided a good entry point, at least for Indian equities. We've had a gap up opening. We've sustained so far the gap up opening, but also recouped 50% of yesterday's losses. Remains to be seen if the indices scale higher from current levels or there is some pullback which comes by. Having said that, both Nifty and Nifty Bank have scaled back above the mark of 50-day moving average, which was breached in yesterday's trade, and strong gains seen across the board. Nifty Bank, of course, outperforming with gains of 1.5%. Pull up the broader markets as well. The bounce back has come in across the board. The frontline indices are up and about, and even the broader markets, as you can see, mid-cap and the small-cap indices registering gains between 1% to 1.5%. The market breadth is looking good, so that's firmly in favor of the advances, unlike yesterday where there was a lot of selling pressure which came by. Also supporting the indices is the lower volatility, the correction rather in the volatility index. Remember how VIX had been inching higher in the last 3 to 4 sessions, so that's down about 5%, cooled off to levels of 14 after crossing 15 yesterday. All your sectoral indices have been trading with gains, but some muted trade has been seen, at least in the ID pack. Very quickly then, on the option side for this Thursday expiry, what are the levels that you should keep an eye on? Of course, with the correction that we have seen in especially last two sessions, Friday and Monday, the base seems to be going lower. So in terms of open interest distribution now, you are seeing maximum open interest on the call side placing at 12,200, while on the put side it is at the 12,000, and that psychological mark was breached in yesterday's trade. But in today's session, we are seeing 12,000 call. Let's just pull up that strike, witnessing unwinding in trade. This added almost 10 to 11 lakh shares in yesterday's session. So call right is running for cover after a gap up opening. You've also got the 12,100 call, which witnessed writing in yesterday's trade, is witnessing unwinding. So call right is this morning are running for cover. And on the put side, you've got the 12,100 put. After crossing that mark, nearly 15 lakh shares have been traded there. So monthly range, Agam, will be 11,900 on the downside to about 12,300 on the upside, but in the near term, since we've crossed the hurdle once again of 12,000, that will continue to be the near-term support for Nifty.
Right. Well, moving on, let's talk about a handful of stocks which are buzzing in trade today, and on the back of an increase in open interest, let's see where there's a lot of traction coming in, and that list should be up on your screen. We do have Biocon and Jubilant Foodworks. Both of them are seeing a surge in OI, along with something like a GMR Infra. RBL Bank is the other one, along with MDC, pardon me, also advancing in trade. But we do have gains of as much as nearly 4% in RBL Bank, along with GMR Infra. Those are the two stocks which are standing out with good 4.5 to 5% increase in OI towards fresh longs. So we'll be watching out for that. Of course, Biocon is looking at a little bit more weakness after, well, we had the news with respect to its biologics sale to True North. But let's move on and talk about a handful of stocks which are also seeing unwinding, and there is quite a bit of short covering in HPCL. And even though the stock hasn't advanced as much, we are looking at a 23% decline in open interest there. Ramco Cements is the other one where we are looking at a drop of around 16% in open interest. Again, a bout of short covering. Mindtree and Indian Oil, among others, which are also seeing a considerable amount of declines in open interest.
So a lot of stocks to keep an eye on, and largely the bounce back has come in the stocks which were falling in yesterday's trade. But on the show today, we will be discussing three Nifty constituents, heavyweights, Infosys being one of them, which has been trading below its 200-day moving average. There was submuted trade seen at least in the opening session, but it's recovered from those lower levels. And of course, this one comes out with its earnings as well on Friday. HDFC Bank, after a strong quarterly update, advances up 20%, deposits up 25%, recouping yesterday's losses. indexes. The stocks back above the mark of 50 DMA. And Bajaj Finance, which fell 4.5% yesterday, has also seen some recovery in today's session, though it continues to trade below its 50 DMA.
Okay, and well, on that note, it's time to get in our experts. But before that, here's a reminder: if you have any queries regarding futures and options markets, you can call us on 022454044141. Of course, write to us on Twitter, Facebook, and YouTube with the #AskBQ hashtag. Today we have with us Nirav Chheda of Nirmal Bang and Amit Shah of Bank of Baroda BOBCAPS joining us on the show. Good morning to both of you and thanks for taking the time out. Nirav, I start with you. Where do we go from here? What's the way forward for the benchmarks?
Yeah, good morning, Agam and Navneet. See, for Nifty, from a perspective of trading, looks like we are now going to be in a range, as Navneet put it, 11,900 on the downside and about 12,300 on the upside. Looks like more or less, in this month we should be range bound in this range itself, with 11,900 being the previous swing bottom on the futures. And, unless that is breached, we will not see, further amount of selling coming in. Also, open interest is quite low at this point of time. So that incremental selling generally doesn't come, and that is what you're seeing, after a 250 point fall, there's a sudden 120 point rise again. So, that incremental selling would not come unless the open interest is very high. Secondly, for the budget perspective, we have budget on the 1st of Feb. Whenever historically budget is presented, the VIX really moves up towards the 15, 16 or, even higher levels. And that had to happen, during the course of this expiry, which happened yesterday. You're seeing, VIX really shoot up yesterday. And I believe this VIX will remain elevated throughout this expiry. And that is why, because the VIX is high, you will not see a linear move in Nifty, and it will remain more or less range bound with bouts of volatility on the lower end also and on the higher end also, where you'll see sudden buying spurts from 12,000 odd levels and sudden selling spurts from 12,300 odd levels. So at this point of time at 12,150, my view would be that let Nifty come down a little. It is in the middle, so if it comes down towards the 12,050 odd levels, it is a buy. 12,100 odd levels, it is a buy. You can go ahead and buy with a stop loss of 12,050 odd levels and a possible target of around 12,300. Or 12,250. Again, for Bank Nifty, I will also suggest, 32,000 being a strong resistance on the upside. If it comes there, book certain profits and wait for, levels of 31,200 odd levels, which should be a good support area, and, 31,000 should be the stop loss.
Okay, so that's the view coming in from Nirav on Nifty and Nifty Bank, and point well taken. So far, sorry, there was fresh buying which was coming in into our markets because of lower volatility, but that too has started to inch higher. It's bottomed out. Sorry, from those levels of 9.5 to 10 we just saw in the last 7 to 8 sessions back. But coming to you, Amit, good morning. How are you positioning yourself looking at the moves that we've seen in the last 2 sessions? Some respite, of course, coming in today after a gap up opening. Remains to be seen if we sustain this opening or not. But do you take any trade at these levels?
Hi, good morning. I have a trade. So if you look at the yesterday's fall in the market, definitely the intensity was quite strong. We witnessed a sharp rise in the open interest as well. From Thursday's level, if we see where Thursday we had a lifetime high closing level on Nifty, and immediately on Friday and Monday we witnessed some kind of a selling pressure, mainly on the large caps. And in fact, yesterday it was across the board. So in my view, till the time 12,200, 12,250 is not crossed, I believe these rise will be short-lived. Mainly, I would be more caution at this level, considering the intensity what we have witnessed yesterday, plus the rise in the open interest. Even for Bank Nifty, the open interest since the inception of the January series has increased by close to around 13%. For Nifty, the open interest has increased close to around 7%. Though the put writers are still holding firm around 12,000 strike price, but I believe they will be tested in the coming times. The more Nifty spends time below 12,200, I believe the more the 12,000 levels will be tested strongly. If Nifty starts hovering and sustaining below 12,000 mark, we can see follow-up selling pressure, which can be seen towards 11,800 levels on the downside. So for me, the risk reward is more better off to play a short trade or a weaker trade compared to play this kind of a pullback, which I believe it will be short-lived. So I recommend to buy a 12,000 strike for the next week expiry put option. The price is trading around 70 odd. Keep a stop loss of 12,200 on a spot level of Nifty. And in case if it violates and starts sustaining about 12,000 odd mark, I believe there is more room towards 11,800 on the downside.
Okay, so slightly different views coming in from both our experts. While Nirav is suggesting buying on dips, well, for now, Amit is suggesting to buy the January 16 12,000 put. Of course, do remember, January 16 is a lot more near term, so we have to keep that in mind as well. Well, that said, let's talk about stocks then. And Amit, I'll come back to you on stocks that are looking interesting to you.
Yeah, so I believe the overall market is likely to see some kind of challenges, but two of the sectors which can see some outperformance, one is the IT space and the other is the pharma space. Now, IT, of course, with a stronger dollar against the rupee, we have seen in the last couple of weeks, IT stocks have seen a good bounce. Even if you look at the overall Nifty IT pack, the open interest has surged close to around 40-45% since the inception of the January series. So within the IT space, I like three stocks, but I'm lower with HCL Technology at this level. The stock is hovering firm around 580 odd mark. It has seen a breakout above 575 odd. We'll monitor as stop loss close to around 565. And on the upside, I believe there can be a short-term upside towards 610 to 620 levels in the near term. Any decline towards 575 should be treated as a buying opportunity, though IT is slightly showing some sideways trend today, but I believe it can see some outperformance in this month. Another stock which I have a buy recommendation is from the pharma space, which is Divi's laboratory. The open interest has been quite steady since the inception of the January series. But if you look at the structure since the December month, the stock has seen a very good consolidation in the band of 1850 to 1810 odd, where 1810 has been tested a couple of times. So that will act as a very good positional support for the stock. However, for a short-term play, 1815 is my stop-loss level, and on the upside, one can look for target close to around 1900 to 1920 odd levels.
Okay, so those are two long calls coming in from Amit and Nirav. Infosys features in your list, and that stock is something which we wanted to discuss as well. It's recovered from the lower opening levels, at least. It's now trading marginally in the green. You have a long call. The company also comes out with the numbers, and ahead of the numbers, there's a lot of action, even on the stock option side for Infosys. So anything interesting that you're spotting here? I was just looking at concentration. It is at the 750 call, which is sitting with maximum open interest. Do you see that as a resistance for Infosys? And of course, take us through your other call as well on L&T.
Yeah. See, yes, it comes out with its numbers, but one very distinct feature here is the open interest on the futures, which is quite less compared to the other times when the results were going to come out. Now, with low open interest, I don't think Infosys is likely to come down drastically.
Audio.
There seems to be some.
And it will. Sorry.
Okay, there seems to be some problem with the audio of Nirav. We'll fix that for you. And remember, we were discussing Infosys with him. The company comes out with the numbers this Friday, Agam. And lastly, I think Q3 is supposed to be muted for these IT companies seasonally?
Yes, absolutely. Seasonally, there's certainly some amount of weakness that's in store. It's not the largest quarter, considering there are a lot of furloughs, the holiday season, and many other things. We are watching out for how their earlier made deals pan out for this particular quarter, And of course, for Infosys, we know that they've relatively underperformed in relation to TCS. So that's always going to be something which is going to be in focus. Today, specifically, Navneet, I noticed that Infosys made a very sharp low today, this morning.
725.
And eventually recovered quite a bit. So
there you go.
have
Gap
it.
down opening, the low of the day, 725, and it's now at 740. I think Nirav is back with us. Nirav, please complete your point.
Yeah. So I was saying, the open interest is quite low compared to the other quarters. Also, month on month, the open interest is quite low on the futures. Even though 750 call has the highest open interest, also the 750 level also holds the 200-day moving average. So very likely you will see a breakout probably today, tomorrow, or in this week, and Infosys will move up towards the 765, 770 odd levels, which will fill the gap that was created some time back, after a gap down. I believe Infosys is headed upwards towards the 825 odd level, so I would be buying this stock with a small stop loss of 740 and the possible target of around 760 odd. The second stock is a buy call on L&T. See, L&T has been in a very range bound trade from the last 1 year or so. On the upside goes towards the 1500 odd levels, and on the downside about 1300 odd levels. It touched its downward support of the 1300 levels about 2-3 weeks back, and from there the buying has emerged again. A lot of shorts were covered in this stock in that meantime, and I believe now the stock is headed upwards towards the 1600 odd levels. So it's a good time to buy this stock at this point of time. On the futures, one can buy at current levels with a stop loss of 1320. I believe 1380, 1360, 1380 is definitely coming. So that should be the target.
Okay, well, that's your view on L&T and Infosys. Of course, Infosys is something that we had intended to take up, but, well, Nirav has already given his views there. And, of course, if viewers do want or have a specific question with respect to puts or, options for any option for that matter, please do post and we will take it up with our experts. But I'm going to talk about HDFC Bank then. And because we have seen, well, a recovery of sorts, honestly, notwithstanding the kind of blip that we saw yesterday, we've seen a little bit of consolidation coming on as far as HDFC Bank is concerned. In terms of some of the key variables, it snapped, of course, a 2-day losing streak. And as I was suggesting that yesterday was a one-off, it does seem as though it may have been a one-off right now. We've seen good advances coming up. We've had the quarterly report or the quarterly update come in where their advances are up as much as 20%, deposits also rising 25%. And it does seem like just another very strong quarter for HDFC Bank. So where do we go from here? That's the question. What is your reading of, as far as your technicals are concerned? What is the futures and options space telling you? Amit, this one's for you. How would you read HDFC Bank? How would you trade it?
If you look at since October 2019, the stock has been trading with a positive bias, making a higher to higher bottom formation after the strong rally what we had seen post the corporate rate tax cut news which came in. So after that, we have seen for the first time the stock has violated the trendline support, which is a minor trendline support at 1280 odd. In my view, till the time the stock is not crossing about 1290, it is likely to see some downtrend consolidation. About 1290, again, the stock will be back in momentum with a positive bias. But till the time 1290 is not crossed, in fact, most of these kind of stocks.
Okay. That's HDFC. Remember, it's a heavyweight with nearly 10.5 to 11% weightage on Nifty. It was the biggest contributor on the downside yesterday, but contributing the most today. So losses have been recouped here as well. And, well, no surprises, 20% number is maintained with regard to what they've been posting for the last 10 years. 20% advances for the quarter gone by, and a growth of 25% for deposits. The other company from the financial space, and that's Bajaj Finance. It's been the darling of the street, at least for the longest time. Last year, 2019, it was the top gainer on Nifty with 61% gains coming by. Yesterday, the stock fell 4.5%. It breached the mark of 4,000. Looks like the street was not happy with the 35% AUM growth that they had posted, because the street is used to seeing a number of 40 to 41% that we've seen. So this was the lowest growth, by the way, way that we've seen AUM growth in the last 2 years. Technically, it's still trading below the 50 DMA, and of course, in today's session, some losses have been recouped, so it snapped the 2-day losing streak. Nirav, if I could come to you for Bajaj Finance. Historically, whenever we've seen correction for this stock, it has been used as a buying opportunity. What are the charts indicating this time?
Yeah, you just see the chart of Bajaj Finance. It's a beautiful chart. Continues to make a higher top, higher bottom formation. The host of resistances or divergences, but all of that notwithstanding, you see the stock really moving up every time. Now again, there's a pattern where in every uptrend there are throws in between where your secondary trend comes in, which is a downward trend or a consolidation. So I believe this consolidation has seeped in into Bajaj Finance. Very likely, you'll see this stock now trade in between 4,250 on the upside and about 3,800 on the downside. Now, mind you, it has made a double top kind of a formation at 4,250 odd. And if 3,800 is broken, you will see a certain amount of selling pressure which can take it towards the 3,500 odd levels, but that still has a lot of time to go, another 200 points from here before it reaches 3,800. So until then, I'd suggest at this point of time, if you have bought at lower levels, book profits and wait for 3,800 odd levels. If it consolidates there, again moves up, that is when you buy again. Or at a higher level of 4250, once that crosses, again that again confirms that the higher top, higher bottom formation has again started to take shape. So these are the two levels to watch out for. If you've bought now, keep stop losses for trading off around 4,000 odd levels. If that breaches, 3,800 is coming.
Okay, if that breaches, if that crucial level is breached, 3,800 is always on the cards. It's a possibility. Do remember that, well, Bajaj Finance has certainly, well, indicated again a strong quarter, but well, there's also the projection of moderating growth, even though growth relatively is a lot stronger than the rest of the markets in relation to its own growth in the past. It's not been up there, but we must remember that there's always a base effect that catches up in this case. However, for now, there is a little bit of recovery in Bajaj Finance. Let's also take up Vedanta, one of the top counters which was losing out yesterday, and it is the top gainer today. And as you can see, indicated by the open interest, there is about a short covering evident in this counter as well. Well, the metal stocks have had a reasonably good run of late, but where do we go when it comes to Vedanta? As you can see, in the last 7 days, it's been fairly challenging. And again, yesterday's day of trade is something that you must take into cognizance. But if you leave that aside, if you can take a look at the last 1 month or the last 3 months chart, there you have it. It's gone up, well, by quite a bit. It's up as much as 10% in the last 1 month. So, Amit, any view on Vedanta as to what we can do with this one, how we trade this one?
So as you rightly mentioned, that metal stocks have seen some good activity. In fact, the rollovers also in the overall sectors, metals has seen a decent rollovers to the January series. So Vedanta, though it has witnessed some kind of volatility in the near term and it is hovering at its base level, I would recommend someone if wants to trade can, right now the risk reward looks favorable. So, but can deploy a covered call strategy where can buy a future at this levels and maybe sell a 165 strike call option, and with a strict stop loss around 153 odd. Considering the overall structure in the last couple of months, the stock is right now witnessing some resistance around 160. If it crosses that 160 mark, then I believe there can be some upside towards 166 to 170 levels.
Okay, that's the top gainer in Nifty for you. But the other space which is doing well is the cement pack. A note from Spark Brokerage indicates their channel checks actually suggest that the cement prices have been increased in all the regions. In fact, in the north and central region, the report suggests it's increased by 10 rupees per bag, and the other regions, so you've got prices in East, South and West region seems to have gone up by 20 rupees per bag. Pull up stocks like Ultratech. I'm just going to pull up the stocks which are there in the futures and options markets. You've got Ultratech, Ramco, Shree Cement, ACC, Ambuja as well. All these stocks are seeing gains of between 1 to 2%. Nirav, a few days back when the markets were trending higher, cement and metal stocks were of course contributing to the rally. Specifically in today's trade, the move that you're seeing, of course, this is coming in back of some note that prices across the board have gone up. Do you trade any of these counters?
Yeah, I looked at most of the counters, at this point of time, 90% stock are still in either consolidation or a downtrend. The only exception being Ultratech Cement. That is the only stock which has broken out above important levels. Also, this stock had a very strong resistance of 4,000 which has been broken. Looks like now the stock is headed upwards towards the 4,500 odd levels. Looking at the overall structure, one should keep a stop loss of around 41.50 and go long only in Ultratech in the cement space. If at all, one wants to buy any other stock in the cement space, the second stock to buy would be Ramco Cement because it is now in a consolidation and near the support area. And that support area is around the 755 odd levels. It touched the, support.
Okay, I think we will get back with Nirav because the audio problem has resurfaced. Okay, do we have Nirav now?
Yeah.
All right, Nirav, please continue our point. We had just lost your audio momentarily. Please go ahead.
Okay, I don't know what's the problem with the audio, but I'll just go ahead. See, for the second, if someone wants to buy a second stock, it should be Ramco Cement. The resistance for the same is around the 770 levels and the breakout level is that. So once 770 is broken out above, only then buy Ramco Cement. It has touched its support of 750 odd and that should be your stop loss. It's a very good support on the downside. So once 770 is broken out above, I believe 810, 820 is coming.
And perhaps the final stock that I can address from my end is Adani Ports. Adani Ports and SEZ. Well, it's seen some amount of traction off late, but that's largely on account of a couple of acquisitions that it's made over the previous few weeks in very quick succession, which is why there's been a lot of increased interest. Its cash volumes have risen by quite a bit off late, and we have also seen it rise to a certain extent over the past 3 or 4 days. So, if you just consider since the starting of January until now, we've actually seen good gains coming in for Adani Ports. It's hard to discern a trend for a company which has been so volatile through the last 12 months. But Amit, would you like to come in on Adani Ports? Tell us something about how you may want to trade this one.
Well, so the stock has seen some kind of a decent short covering in the Jan series where the open interest has reduced by 5% odd. But if you look at the broader structure, as Agam rightly you mentioned, that the stock in the last 1 year has been trading in a sideways band with a lot of volatility in that within that range. So in my view, though the stock on a positional front is in a positive trend, but I don't see much of a trigger from a positional point of view. Someone who is a very short-term trader can keep the biasness positive with a stop loss around 375 odd. It has given a short-term breakout above 385 where it is hovering right now, but it needs to sustain above this resistance mark. If it sustains successfully above 385, we can see some open interest traction building in, and the momentum towards 395, 400 levels can be seen in near term.
On the future side, as of now, it looks like a short covering bounce. One more stock that I want to address is Biocon, which has seen correction. Now, remember, the stock was down 5% yesterday as well when the news came in. Private equity player True North is buying 2.4% stake in the company, and that's Biocon Biologics, which is the subsidiary of the company. Maybe the street was expecting a better valuation because that values biologics business at $3 billion, and this is also a precursor to the IPO that will be coming out for the biologics business. So 3% lower. Look at the build up 12 to 13%, indicating fresh shorts here. Amit, very quickly, looking at the trend yesterday, today, Biocon, would you trade it on the short side?
So I would still wait the stock, though it is in a lower top, lower bottom formation. The risk to reward considering yesterday's fall is not convincing at this point of time. Though the stock has witnessed some kind of a violation of its near-term support of 283 odd, but I would be waiting for some pullback to come in for better risk to reward to match to create a short trade. If it comes to close to around 283 odd, then the comfort level would be with a 290 stop loss.
Okay, guys, and on that note, I am going to thank both our experts, Amit and Nirav, for joining us and taking us through their views on the markets. For more updates on the F&O space, do also check our website, BloombergQuint.com, specifically the futures and options pages.
And with that, it's a wrap on this edition of the F&O Show. Thanks a lot for watching. It's goodbye from the entire team. Stay tuned to Bloomberg Quint for more news and updates.